Good afternoon. I'm Chris Swift with Swift Trading Company. On behalf of Chris Winward and Sean Gammon, thank you for joining me this afternoon for a little bit of Shooting the Bull. I've written a couple of different times about feeling a shift in the market that came last week from the Fed, and I've been questioned about that. What actually is that shift? So, in trying to explain that to you, we saw heavy volume and heavy selling on that day that created an internal feeling that somebody wanted out of the market. It didn't matter what price they had to pay to get out. And then as we moved through Friday, where we didn't see much price action there, and then Monday we didn't see much price action, today we did. And although the energy market kind of skirted the rest of the markets, we saw the cattle market, we saw the grain markets, and we've seen some of the other markets, especially the financials, really do some significant damage to not only the chart, but to the actual industries that both of those represent. In the equities market, we have now seen, because of the higher interest rates, people will tend to pull more money out of investments and put that into an interest-bearing account where they can have no risk to it. As well as the bond market has shot up the bond price has gone down significantly, shooting the interest rate up significantly, and that begins to work on businesses. If businesses begin to turn south just a little bit, then we know employment is the next issue. We've already seen some reduction in employment, although still elevated. It's been not as elevated as what it has been in the past. So we've seen the gains in employment, but they have not increased going forward. So we go over to the cattle market, and we'll just take a look at it real quick and see what it is. So let's take a look at our corn market first, and we see that it is plateaued right around this 480, 490 level. If it were to dip a little bit further, we believe cattle feeders would then have the opportunity to put more weight on those. And especially with this time of the year coming in, it should be a little seasonally a little bit better. We saw the fat market today break pretty hard. It has begun to trade back underneath previous highs. And although it could catch anywhere around that 34-day moving average and start right back higher again, the aspects of the divergence between the July high and the current high, as well as the market breaking back lower, it just looks like we got some headwinds in front of us. If that is the case, if the fat market does start to trade lower, then I think it's all over with for the feeder cattle market. This is an hourly update on the feeder cattle market, and we see this long stretch that we had to go through in the time frame between starting July the 12th all the way into August the 29th, and now we're right back into that range. So we pulled out of that range by about $6 to $7. Now we're back into that range. If we start trading underneath that range around 248, I think we're going to see some significant movement in the feeder cattle prices going lower. Again, this all hinges on the cattle feeder. If they begin to push the price of cattle lower, which I've kind of already heard that they are, the feeder cattle index then begins to trade down, and the previous wave 4 level is where I think that we'll come back to, and that is right at around 220. So tonight, when you're thinking things over and you look at the market action and you think, okay, we probably have seen some kind of shift in the markets where we see more selling than we do buying. We also note that we're seeing the corn market having plateaued, and if it does trade lower, then we go back to the old adage of cheap corn makes cheap cattle. If that is the case, and we start to see the price of fat cattle move just a little bit lower, regardless of whether it's consumer demand on beef, whether it is packers trying to control their margins, whatever the case may be, if we start to lose that, the margins become so irate to the cattle feeder, we almost believe that they have to find some way to pay a lower price for. So keep all these things in consideration tonight when you're going through marketing. And if you think that we can help you market that inventory in some manner out in the futures, please give Chris or I a call in the morning, and we'll be more than happy to help you do anything that we can. So I appreciate you taking the time to listen. I'm Chris Swift. Have a great evening. Thanks.